for the first Monday of the month, we highlight the technical review for the major index across the ASEAN region. So let's start with the first one, the usual FTSE ASEAN 40 index, which is we use as the benchmark for the ASEAN equity. So as per our earlier report on 27 May, we highlight that the consolidation likely to be kept as we expect a recovery once selling pressure has been normalized. Now, the thing is, if you look on the screen, the chart that the performance of the index since then, the downside was pretty much kept within the what we call that our second support. I mean, our first support at 10,150 has been taken out, but the downside was kept reading at the psychological level of 10,000. So this actually pretty much for me something like a double bottom kind of pattern. But the problem is the subsequent rebound was seen as the upside was pretty much being kept right within the Ichimoku cloud over here, suggesting that selling pressure still remain strong. So if you look on the reading on the RSI, you can tell there's a multiple rejection as well. The what we call that the downward trend in terms of the how the momentum move. So suggesting there's plenty of selling pressure lurking behind the scene. For the past 3 days, you can tell the candlestick also have fairly much more weaker, indicating that there could be more pressure going forward. Regardless, we expect the downside could be kept within the current support as we expecting the ASEAN equity to continue consolidating within this current immediate support and resistance for the time being. All right, now moving into Malaysia, as we highlighted on the 6th May, the KSCI index has indeed traded higher, and testing the immediate sub resistance at 1628. I think in mid-May, but there seemed to be a little bit hiccup in terms of how KSCI performed, which means the resistance was not being taken out. We've seen a rejection actually, particularly as you saw a series of the what we call the reversal pattern of evening star 2 weeks ago. But last week gain was pretty much almost neutralized the reversal signal. As for now, I think because of the nature of the overbought reading and slightly weaker performance on the D trend, and last week recovery yet to nullify the earlier evening star pattern within the index has some sort of the what we call that possibility to consolidate lower or to kickstart a short-term pullback. But the downside could be kept right within the current support within at 1530 and 1560, given the overall trend remain fairly positive. So accumulate a weakness is the mantra right now. So the resistance is still remain at 1628, 1685 support as the level I mentioned earlier. Now back into small cap index. Small cap index look quite I would say exceptionally quite strong, particularly as the reversal signal that appeared 2 weeks ago has been nullified by last week gain. Momentum, if you look on the screen, RSI continue to create a new higher low structure, and we've in fact we're seeing a fresh uptick has been formed on RSI last week. So it gives you indication that the bull is pretty much in charge. So we actually revising our target higher after the index has successfully rising above our initial target earlier. Now the earlier resistance now turning into our support at 17,800 and 7,200, while the new target will be at 20,000 and 21,000. All right, for Jakarta JCI index, we expect further consolidation. The downside could be seeing the index to drift lower, testing the support at 6,800 and 6,640 point, while the idea at the index sector index is actually healthcare is actually looking quite more supportive after the earlier breakout completed a return move right within the unit support at 1368. So we're expecting the uptrend to continue with the next resistance at 1470 and 1526. For Philippines, earlier we highlighted that we expect the correction to continue, which we think correction could be completed right within our support at 6340. You've seen a multiple rejection within the 61 point Fibonacci level. Right now, pending a stronger reversal signal, particularly within what we call that, we're waiting for the breakout move in RSI, which could translate into immediate breakout above 6,800 region. Regardless, we think there's a room for further upside for the PCA index with the net resistance at 70 7055 and 7520. Meanwhile, for PISIN, which is Philippine Industrial Sector Index, the upside that we saw earlier was pretty much kept within the 9,800. We're expecting while it could actually building a new baseline and re-challenging the upper resistance, banking on the what we call it a new high-low structure above the 13 and 33 moving average. For Singapore, SCI index, we're expecting the index to trade higher. As for last month, it was traded higher, but it still fell short to hit our immediate resistance at 3370. And we've seen a weakness has coming in, particularly for the past 4 days. Multiple rejection on the daily candlestick on the back of of about reading on the weekly chart suggests there could be some sort of pullback in the near term. Immediate support will remain the same at 3135 and 3040. As for now, we are continuing to expect the ICI index to ranging within this current support resistance. Meanwhile, for S3 index, despite the rebound from the triple bottom, the rebound was not as strong as we expected earlier. However, the structure remains supportive, and we think there's decent chance for the index to continue to test the immediate resistance in near term, with which actually set at 1042 and 1090. For Thailand SCT index, the bullish divergence earlier has not been what we call that has not been there's no follow through in terms of buying interest, despite we seeing a bullish divergence earlier. Momentum remain flat, selling pressure remains strong. You can tell that index continue to drift lower and could test the lower support now at 1280 and 1190. Support has been revised slightly lower at 1400 and 1460. For my index, which is covering for small cap in the Thailand market, the rebound expectation has been nullified following another decline move as the index taken out the immediate support earlier, which is now turning into resistance at 385 points. So given the fairly negative reading in RSI and new lower structure, we're expecting the bear to drag the index lower with a support at 350 and 320 points. For Vietnam index, the index has been building a new baseline above the previous resistance, now turning support level. We're expecting the higher possibility for the index to test a new high or create a new high in the near term, with the net resistance at 1300 and 1380. While for HNA index representing the small cap in Vietnam market, is similar pattern. We expected the index to continue to test the key resistance level in the near term. Resistance is actually 247 and 257. What do you